Happy Friday, Eric Bible with the Bible team at Neil Home Loans. And yes, another Friday. And yes, another decline for mortgage interest rates. We kick this Friday off with the 30-year fix at 6.41%. That's down from last week's 6.48. And the question becomes, despite the fact that we did not have any meaningful economic news this week, what held rates in this new range and ultimately drew them down lower compared to where we were last week? And also 2 weeks into the NAR settlement, wanted to point out some very, very valuable information and insights that we're seeing on this and some talking points and some tools that we can share with you to help you demonstrate and convey value to your clients. So first and foremost, Fed pivot. What drove rates down further this week? And some very useful information, as something we're hearing a lot from our customers and clients is that, hey, we want to wait because the Fed's cutting rates later this month. So first and foremost, last week, Friday, as I mentioned on our update leading into that, the important Jackson Hole Economic Symposium, Jerome Powell took the podium and uttered those four beautiful words the market has been waiting for over a year. The time has come. And what he meant by that is that the time has come for an adjustment in monetary policy. Fill in the blanks, rate cuts. So it looks and it appears and confirmed that a Fed pivot is upon us, and the next move at the September 18th meeting will be a rate cut. Now, the question that the market is asking is where it is 100% certain now that the Fed will cut next, which is why we're seeing mortgage rates continue their decline as it looks like we're entering into a new economic cycle. The question the market is asking, will it be 0.25% decline or will it be 0.5% decline? And there's some interesting insight around where we see the Fed going, what the Fed is focused on, and in turn, how this information can be conveyed to your clients, because the clients are asking us. So in turn, we know they're asking you is, hey, we want to pause because we hear the Fed's cutting rates. So more to that to come here in a second. So first and foremost, why the Fed has mentioned in advance of that meeting in September, why they're cutting rates. Jerome Powell was very clear to point out that the Fed now believes and sees empirical data to align inflation coming down with their target. Yes, we're not at that all-important 2% mark, but it appears based on the last few months of consumer price index, inflation data, that we're seeing a steady decline. Prices are falling in real time. So the Fed's pleased there. What the Fed is primarily focused on now, where yes, inflation is still important, the focus has shifted to the labor market. And that's really what the market is watching here too. Where yes, inflation is important, but the labor market is now kind of taking front seat. We've seen unemployment rise over the last few months. There's been some revisions to the jobs report. So that ties into now the market's question of, will it be 0.25% cut or will it be 0.5% cut? It's going to come down to labor. Next week, Friday the 6th, we receive the August jobs report. And here there's an expectation that if we see a strong jobs report where unemployment declines and we see jobs created, it's going to be a quarter cut in September, which in turn could very well drive mortgage rates up in the interim as the market really wants a half or more in cuts. Secondly, if we see weaker jobs, another rise in unemployment, that argument for a 50 basis point cut becomes very real, and we expect rates will improve from there. Now, the question we're getting from our clients, and this is where I want you to pay attention. Hey, Mr. and Mrs. Realtor, Mr. or Mrs. Lender, we heard that the Fed's cutting rates later in September. We want to wait until those rates come down. As I've mentioned before, the Fed does not control mortgage rates. Keep in mind, the Fed has done nothing since July of 2023 other than talk. And yet we've seen rates post. As I share this info, we're at the best levels in mortgage rates, and we have in over a year. And the Fed funds rate is at the same levels. So let me be clear here. The Fed only controls short-term money, not mortgage rates. The speculation that cuts are upon us and we're entering into a new economic cycle is where the market is going and why we're seeing rates trail down. So, one great talking point that I'm sharing with our clients, which is creating action now, is sharing just that. The market movement and the rates that we're seeing today are based on the fact that we believe the Fed's going to cut. They've said that they're going to cut. We just don't know by how much. More importantly, though, the market is expecting one thing, 0.5% reduction as opposed to the quarter. If we see the quarter percent reduction, it's very likely that bonds will not like it, which control mortgage rates, which in turn we could see mortgage pricing get worse. So if you're running into those challenges, that feedback from your clients, share this information. And if you're running into challenges with that, connect them with us. We'd love the opportunity to help set the record straight. Lastly, I want to close with NAR. As we know, we're 2 weeks into the new way of conducting business, buyer broker agreement, seller not being able to advertise if there are concessions on the property to pay for the buyer's agent fee. With that, we're still getting a tremendous amount of question around how can we articulate as agents our value quicker in the process. And it brings me to the equation of, on the lending side of the table, what is your rate? It is the number one question I receive on a day-to-day basis. What's your interest rate? There's so many factors that go into quoting an interest rate for a client. Yet as consumers, we believe that the lowest rate is the best possible solution when in most cases it is not. The same is true on your end. Here at Neo, we've developed and put together massive playbooks that help you, the agent, convey your value so early on in the process. And when you're approached, why should I pay you 2.5%, 3% when your competition is saying they want 1%? There's no difference. It's demonstrating your value. We know the amount of effort, the amount of effort that goes into representing a buyer. Can you convey that to your client? If you need or want what we've put together, please reach out. We'd love to share. As always, let's make it a fantastic Friday and an even greater weekend. Happy Labor Day and enjoy the long one. Thank you.